would have loved to say good morning, but unfortunately it's past 1, so I think I have to say good afternoon. Maybe you've not had lunch, but good afternoon, and I may be standing between yours, the panel the people and the lunch, but what we will do is we will try to intellectually stimulate you guys so that you have a better appetite when you go for lunch. So on that note, we get into the 4th panel, which is going to be about AI-powered digital lending and payments. Now, people have already talked about AI, also talked about corporate banking, have talked about what the future holds. But there is something to do with on the lending side. So people know about lending, payments. Now let's throw some flavor of AI into it. And on that note, let's meet our panelists. So the first panelist I would like to call is the COO of the international operations at Emirates NBD, Barid Neogi. So we started with the operating officer. Now, next slide is to call someone who deals with technology. So we call Noman Rasheed, the CIO at Dubai Islamic. Operations done, technology done, why not business? So let's call Kashif Thakkur, who's the head of digital banking and retail products at Reem Finance. And finally, we need to have a technology partner as well. So it's Anjan Pandey, the Vice President for Value Consulting at BUSINESSNEXT. Get straight to business. So I'd like to start with Barid. The first question to you is, so we're talking about digital lending, and now we are going into AI-led digital lending, and you're talking about AI-led digital lending across segments of customers. So what do you think are the operational challenges in scaling AI-led digital lending?
Yeah. Hi, everyone. You know, the challenges that we have in the manual process today, all the challenges will continue even in the AI era. I think the main reason is the data itself. So I think everybody in all the previous panels, we heard about data. So clean data, I don't think we have anywhere. You try to take a credit score, the credit score is not necessarily available in its real form, especially say, for example, a newcomer comes into the country, I don't have his credit score, and I don't have the way of getting his credit score from the other country. I don't think we have that. Then the data privacy comes in, your data personalization comes in, so those creates problems. So even if you want AI to come in and help us in creating, I think someone spoke about the content, that is which particular, maybe I will call it a supervisory sort of a role, has a look at it and takes a decision at this point in time. I can't have it because I'm not sure about the data. So what will I tell AI? Go here, get my personal information. Go here, get my credit score. Go here, get his maybe transactional details. So I don't have that. So without that, to what extent will AI become functional? That is a question mark. So that's why data is the first problem. So until and unless data is purely sorted out, AI will not be 100% in lending. Payments, it is still possible. Payments, it may go in and you can achieve a lot in payments from a pure STP and AI perspective, but lending is still difficult. And on top of that, you have the problem of segments. So every segment has its own nuance. SME is different, personal is different, your, maybe even if we go into the larger corporates, it's even more different. So that's one side of the story, data. The second problem you have would be the regulations itself, that also most of our panel spoke about before. So if you look at the regulators also across all countries and within the same country are also different. Like, if you want to do lending out here from a free zone perspective versus if you're trying to do the same thing within the city, it's different. So not that it works in the same way. Plus, the regulator has its own sort of control measures that they would like to do, and they wouldn't like to go beyond a particular, I would call it not, they wouldn't like to go, but they would like to supervise you, and supervise you from a very, very controlled perspective. Like, say, for example, I think Venkat spoke about that. Like, say, for example, when we reject a application, I'm supposed to tell the customer that why I have rejected it. And when, with the help of AI, I'm trying to do that in mass, in scale, so that, experience, that sort of data, whether I have it quickly, and who's going to explain that, becomes challenge. And not only from the regulator, even from the customer perspective, if we really move everything away to the AI and allow it to take a decision and do it, customer facing is far away. I don't think we can depend on AI to be customer facing yet. We're far away. Maybe internally we can keep, but it still needs a eyeballing. I think our CIO gave one example just a few days back, is when in Australia, one particular bank had to lose quite a few dollars because of that. So what happened is, in their call center, they tried their first use case, where a customer called up and just wanted to joke with that particular agent and asked a question, saying that, okay, there was a lottery that was supposed to be done by your bank, and I think I won. So what about it? This agent actually went and said, oh, congratulations, yes, you actually won. So this particular guy came in and the bank had to shell the money to him, where it was not true. So this is again coming back to data. So if you don't have the data, if you're not sure, 100% sure about what you are going back to, you will continue to face this problem. I think the third aspect of this would be the technology part of it, because in technology, I think Sampath explained that a lot, like how many AI agents can you have? Is it of the same type? How many agents do you need actually to run that? That challenge will always be there, so, but at least that's technology will solve it for us, I'm sure, in the future. And lastly, the people. Again, the skill sets that Sampath spoke about. And how do I make sure that my current operations team understands where they're going for? Yes, we are right. I think I 100% agree with Venkat, because within the next 2 years, I think I will bet on that again, that operations will be the area which will get hit most because of AI, which maybe we're not realizing. So there is a lot for our operations team to do, not only to make sure that you upskill these people, make sure that they understand what is there for in the future for them, and okay, the new generation and the old generation, the way they batch together, and how does the new generation take over from the older generation, that becomes very important, because you'll have to keep training, keep upskilling them to make sure that they understand what is there in the near future for them.
So I think that is echoing what has been discussed in the last 3 panels as well, in terms of AI is not that magic wand that could solve all the problem. It's a lot of things that needs to be put in place, whether it is people, whether it is process, whether looking at the use cases itself. So in that sense, I know if I come back to you, to Noman, so how can banks in the region, look at innovation when you're talking about, digital lending? AI is one part of it. We are looking about digital lending paid, but if we look at innovation as a whole, how can they balance innovation while keeping, I would say, pace with the regulators when they come back and say that there's regulatory compliance, there is compliance beyond regulations in terms of global compliance requirements, and typically on privacy and security?
Yeah, before I address that, just where is Ram and Chetan? The guys are here. These pictures of us, black and white. You should make them colored pictures, guys, because the only difference between this and putting a flower mala around this is like makes a huge difference, guys. So let's put some colored pictures of ours, which
Operations is already dead.
there you go, there you go. Before I answer that, Ram, I just want to add a couple of things to what my colleague said. I think there are two more very sweet challenges which we are observing to help operations or per se back office, not just operations. I think one important challenge we are, as an industry, we are struggling with in AI space is the generalization of AI models. So what is happening is, when you look at, somebody talked about in the previous panel, one segment, customer, the book they were referring to. The struggle we have is if you have so many variants of your customers and segments, now when you deploy your AI models to bring some automation, some personalization, you end up managing so many models. And operationally, it's becoming a challenge with respect to accuracy and total cost of ownership as well. And the second, he did not mention that candidly, but I will say that on his behalf as technology. The other challenge we face is the integration of the AI models with the legacy ecosystem. So one example is the credit scoring, which happens within the credit function. Now, if you have to make it smarter scoring to give a better experience, the challenge is you may end up having a very legacy, very archaic credit scoring engine. Now you need to bolt on top of the AI model. There's a challenge there. So those are the sweet things which we are trying to resolve for. I think one of the colleagues here was very candid about when he asked questions, when 2 years, 3 years, when this whole thing will mature. I think it's going to evolve. Coming to innovation, you spoke about innovation, compliance, lending. This is also a topic, I think we have been talking, all of us, in these type of rooms for decades now. How do we balance between innovation, digital disruption, and deployment? That colleague of mine who's sitting there behind, he says, Noman, you know, when you talk, it sounds like philosophical discussion. So I'll get there in next 5-10 seconds. Bear with me on that as well. But 4 or 5 areas which we believe help do the balancing act between innovation and making sure that we stay compliant and we stay secured. Number one on innovation front is pay very close attention to the so-called security and cyber space. The general tendency is that we approach cyber and security as a bolt-on as opposed to built-in, right? And that becomes a problem with innovation because you are moving very fast on innovation, and then you see cybersecurity as a drag. It's only because you try to bolt it on later as opposed to early. So, so that's one space when we talk about balancing act. Bring cyber security in the middle as opposed to seeing it as the tail end. The second balancing act, which at least for us is working very fine, is this approach which we had adopted for innovation-led risk tiering. Now, what that means is when you bring a digital disruption, you bring a new innovation. AI is one of those topics. What sort of a risk tiering you apply to that new capability? So what we do, and perhaps industry is also thinking about it, is that you may not apply one tier to all, one risk tier to all sort of innovations which you do. As an example, if we are delivering innovation within UI, UX space, the risk tiering of that sort of innovation could be perhaps low. Not too much of a problem in that space. But when you are deploying innovation in origination process, perhaps the risk tiering of that sort of innovation could be medium, as compared to risk tiering of an innovation you are trying to deploy in a core customer information stack of technology. So risk tiering helps innovation creating a balancing act. That's a second topic, which we need to keep in mind. The third one is the one which we don't like, is governance. It's governance, very dry subject. We all kind of don't see it as default passion to governance. And here also, when I say governance, it can be also very exciting if you create a innovation risk council type of approach, because then those partners of yours become actually your co-advisors in your innovation journey, as opposed to those who create a drag for you, right? That's the third or fourth topic. And the fifth, perhaps, is the famous one, which you talk about, the upskilling of your own people. I mean, somebody asked a question about employees and how employees AI is helping. Upskilling on innovation is also an art, right? How do you do design thinking in your journeys is an art. You can't just bring a consultant or advisor and say, can you redesign my journeys? It has to be inside out and outside in view coming into play. So to create that fine balance between innovation and the other aspects, I think these are those, I call them the ingredients of a successful biryani. I think this is what we should consider. Sorry, a long answer to the short question, man.
It's perfect. So now coming back to, coming to you, Kashif, you're from business, so you're responsible for the top line and the bottom line as well. But you suddenly heard two things. One about the challenges and the other about the trade-off and how to do the trade-off. So what do you think, what innovations do you think is really helping you in launching new products on the digital side, whether it's lend on the asset side or liability side, especially for retail customers? And what kind of innovations or what kind of practices are being put in place to specifically look at the digital banking experience?
Yeah, so thank you very much for the question. Actually, if I were to do justice to that question, I think probably I'll have to speak for a little longer than 2 hours, but I'll try and summarize of whatever best I can now. So, I mean, with apologies, my view on the thing is very, very optimistic, right? So, I mean,
should be, as a business should be.
Because what we've seen so far is, so you see, there are a lot of areas that I can probably quote just to give an example of how profound of an impact technology has had so far in terms of tailoring a much better customer experience. And I can dive deep into right from the very beginning of being able to underwrite the customer in terms of the customer experience when they interact with us, our ability to identify the customer, you know, and spot the usage patterns and tailor our ability to go back to them with stuff which is a lot more relevant. So there's so many areas, and this probably is falling into that 5% successful use cases of AI that we spoke about earlier. But again, if that 5% has contributed so much, I think it's significantly improved the customer experience. Now, allow me to just dive deeper into the areas that I just touched upon. Let me just take up on the, for consumer products, our ability to underwrite right now. And I come from a school where, while I was at Citibank, I got certified and trained on consumer credit risk. And at that time, and this is early 2000s I'm talking about, and I know the whole painful journey of being able, although it is a program lending, right? But when you have the criteria all set in place, but it's a mammoth task to be able to underwrite the customer. You have to ask a lot of customer questions or get a lot of information to be able to reach a point there. And with the absence of bureau, I mean, you're again shooting in the dark. So I start my comparison from those days. And fast forward to what I'm doing today now to build a digital bank. I'm practically able to underwrite a customer by a facial scan. And I can qualify that statement. I know it's a big statement to make, but today we have the technology to underwrite an individual customer by a facial scan, and that technology enables us to tap into government sources today. And especially if this market we're talking about, we have the ability to have those integrations with golden sources where I can pull data on a customer from MOI, I can pull data on customer from Mohre, I can pull data from Bureau, I can pull data from UAE Pass also, and so on and so forth. So I have multiple sources. Now, that data is undeniable. That's the most updated recent data coming from a golden source. If I have access to that data, I don't need to ask questions to the customers. And we ran on building this journey with a dream just to be able to scan the face and underwrite. But yes, the technology exists, but we have to comply with a lot of regulations, and we have to respect the law also. So there's some changes we had to make. We had to ask the customer to input a field, and that was something we hated to do, but that was required by regulation. There's some fields we require from the customer to input. Even then, the whole underwriting for, let's say, a consumer product was less than 3 minutes. Now, in my mind, when I compare to where I started and to what we are building right now, it's profound, the change. And only technology has made it happen. But I think a lot of that credit goes to the market we are in, where we have access, API access, to tap into the government sources as well. So this is what we've achieved. Part of this journey is AI-enabled. So liveness check we can't do unless we have LLMs in place. But not the entire underwriting process is AI-powered. I would like to make another comment here also. When you talk about being able to implement these kind of models to completely revolutionize the customer experience, the challenges between established large banks and new entrants are completely different. And I really respect the point of you not having the quality of the data that you actually require to make accurate decisions. I think the new entrants are probably they have this undue kind of an advantage because they are building the data now, so they can implement those controls to make sure that the quality of data is actually pristine. And then they are able to take those decisions very, very neatly. So that advantage goes with the challenger banks, the neobanks, or the digital banks who are coming to the market right now. So that's one area which I am very, very confident that what we have seen so far is significantly better. And if we are able to maybe have more cutting-edge technology incorporated, I think we'll be probably able to do a much better job, even better than where we have reached now. So this is one area. I'll very quickly, there's so many areas I can speak about, but I think I just chose to speak about on the onboarding because the change is significant. The other area is, historically, if you look at the banks especially, and I've been in this industry all my career, there is, like all the other businesses as well, there's a need to segment the customer because, of course, as a business owner, you like to understand the customer a little better. And traditionally, the only way to do that is just put them into homogeneous boxes where maybe you slice them up on demographics, psychographics, or any other way, and then try and create propositions which probably appeal to them a little more, right? But look at now. And I think a few more, I think sometime back, one of the panelists spoke about, I think, hyper-customization and the lack of our ability to do that in this region, which I kind of resonate with. But again, I mean, this is something that we are passionately pursuing also now. But it's a very, very interesting point. So if historically, if you're trying to do a very good job for the customer, and for that you need to look at them and slice and dice them based on demographics and psychographics and segment them, so that you can actually make more sense to those set of customers. And today, if the technology allows you, so whether it's AI or very advanced level programming or any other, off-the-shelf kind of a solution, if the technology today allows you this to understand a customer at an individual level, then there's actually no need to segment, if you know what I mean. So you don't need to segment now because you were doing segmentation because you're trying to put the similar behavioral customers into one box and then service them better. Now, if you have your AI tool sitting upon your proprietary data set, which is your static data or maybe the dynamic data that you have in your warehouse, now you can actually understand an individual behavior And this is what we're practicing now. So, I mean, we call it democratization of our value proposition, which means we will not call you UHNWI or entry level or any other segment name that we're historically calling. All customers are the same for us because now we have the ability through technology to understand you individually. Now what we will do, we will have a look at your activity. So again, I mean, I'm sure we all understand. So when we onboard a customer, we have to capture a lot of static data, right? Then when the customers with us start interacting with us, then we have a lot of dynamic data. So we can leverage that and keep managing the profile at individual level. And then that gives us an ability if our the promotional models or let's say the loyalty platforms, if you want to call that, are having that ability to identify those usage patterns, and then whatever set of deals that we have are able to then push them according to the individual preference, not at the segment level. Then imagine that discussion that I think Ali was the one who highlighted that. If you're able to do that, then there's no need to segment also. And now we're going hyper-customized into the individual needs. And that's doable. And this is something that we are working on also. So I think the changes that technology has that brought about in our ability to manage business a lot better, onboard customers a lot more accurately, and give customer an experience that they probably had never experienced before is significantly changed. And there's more to come.
Thanks. I think a very positive response, right? A very optimistic response around innovation and AI. So that brings a lot more onus on you now, Anjan. I think you will be representing quite a lot of fellow fintech players here in the room. So what do you think are the key ecosystem partnership that will be required, especially the region, to accelerate innovation in payments and lending? And as a fintech player, and how do you think you or your fellow colleagues will be able to support in this area?
Excellent, and thank you for this question. And I totally agree with my fellow panelists. So I'll try and make it short, So 5 things I feel from the ecosystem perspective which will be needed from a lending perspective, and I'll try to maybe give it a UAE flavor. One is when I'm lending, when I'm a bank, I want access to marketplace. That means places where I can potentially lend. So we now see Ani taking a lot of traction across, and the J1 card about to launch. So one is to have access to that marketplace where potentially there is interaction happening and I have an ability to lend there. This also gives you the validated data, by the way, because that's a platform the banks has already onboarded with. The second is when I'm lending to an individual. So I'll need access to identity and credit information. So ACB, UAE Pass, all the other pass places where I can potentially get the transactional data and the credit profile of an individual, both from an auditory perspective and a regulatory perspective as to why did I lend to an individual. So access to marketplace, establishing a credit identity and the credit history of an individual. The third I'll say is very important nowadays is the acquirer networks. So, Network International, Magneti, all of those places. Because when we are lending to an individual, eventually the money is going to a seller or to an SME, right? So that individual should have access to the money which is flowing to him and at a much lower transaction cost. When I'm making a checkout at Carrefour and I'm potentially applying for a lending, the guy needs to know that he's not being charged for the transaction that I'm making. So he still needs his money, right? Without the commissions that is being charged by the networks. So the network integrations are the third one, if I may say so. Fourth, if I feel, I think in all the panels we discussed about AI and what banks are doing. But I specifically talk of UAE. UAE is a market where a lot of tourist inflow happens. And there are a lot of nationalities who are coming here. And if you see an average Indian coming in and shopping around Dubai, will be swiping his cards, let's say around 50K, if he's traveling with his family, staying at a good hotel. So having the ability to get to cross-border, having access to various networks, let's say, how can we get to Sama, how can we get to Fowry, and all of these places, NPCI for that matter, in case of India. So third is cross-border intellect on the person who is coming to India from any other places, how can we lend him or bring him in the inclusive system, because that's a market which is untapped for so many banks. So when I'm tapping, can, Reem finance me for that, instead of HDFC doing it for me, right? So that's will be an area to explore. And if I'd say, the fourth will be obviously, saying risk. How do you find out risk? Because all colleagues mentioned when I'm lending, I need instantly. I am not kind of waiting 3 days for my hotel bill to be settled, right? So there has to be an AI model. I think a lot of banks are working, and I think a lot of panelists here said also, building like an AI brain to underwrite you in real time, looking at your transactions and solving it in the real time. So I think these 4 or 5 ecosystem plays, establishing identity, getting to the marketplace, cross-border, acquire networks, and finding out how do we risk profile an individual. These 4 or 5 things are important. Now coming, I think, from the fintech space and all my colleagues here in the room, see, I think there is being strive around tech to always simplify it for the end consumers and as well as for banks. So I think in the fintech ecospace, technology companies like us, we've been trying to give you ability to, extend the banking processes at the point of checkouts. So let's say if I were to go to Emirates NBD and apply for a process for a lending, and you already have that process in the bank, how do we make you enable to give that to a network boss? So those things are something that technology companies like us are doing, giving you the ability to extend your banking processes, not just to the fintechs, but also to various checkout networks, whereby you can gain from the untapped market. That's one. The second is lending is very dynamic. A lot of times what happens, the regulations keep on coming. And, I think in the morning somebody mentioned about geopolitical. So the geopolitical things will change. Morning, the US president wakes up and makes a comment about sanctions, and the markets go tipping. So banks have to adjust to it real fast. How do you lend now? Because you have to save something. So lending, if I have made a journey, how do I change it? Can I change it in 2 hours? Can I change it in 1 hour? Because I have to now protect my stock market and I have to protect my margins, right? So if I was lending at X rate in UAE or European, if I was making a trade settlement with a said company, how do I adopt it real time? That's something. So one of the problems that we are solving is when you're making lending journeys, how do we give you a master dashboard or a cockpit kind of a view, whereby you change your parameters one and all your lending journeys can change instantly? Because a lot of times what has happened is banks have been growing these things in-house, that is very good. But giving you tools to kind of help you change all those processes in one go is something which is, I think, the need of our. This will keep on growing more and more. And with the geopolitical crisis across globe and a lot of things happening, banks will need this agility fast, right? Something happens in a country, a lot of traders are doing, you're doing a lot of trade business in a said country, and you want to change it real time. How do you change it? So I think those things will help banks adopt to, protecting themselves from market inflations and all of these processes. So I think those things will be interesting to see as we grow.
So it's interesting times for not only the banks, but also the fintech companies. And obviously we cannot ignore the regulator as well. Interesting time for them as well, because they are also trying to cope up with ensuring that the regulation is in place. But when we talk about lending, and innovation, we cannot miss out open finance. And UAE is, one country which, focused on open finance and not on open banking, while the others were talking about open banking. So I would like to ask you, how has open banking changed how banks would lend? And when this question gets posed, and it's talking about lending, it's always tried to start with the business. Kashif, any thoughts on this?
Yeah, so I think this is a very, very interesting question. I think UAE market is a little late entrant to this game. We have seen PSD1, PSD2 in European markets, and we have seen a lot of push from the regulator to make it happen and resistance from the banks. I mean, it is only natural to expect to see similar thing happening here as well, because what open finance would eventually do is, of course, so it's a mandate now, so we can't run away from it, so we have to implement that. So it's a two-sided console, basically. So one console is that you have your banking tech stack, and then you have to have this console available where you can connect any fintech or any third party or financial entity outside that's licensed, by the way, who can just interact with you and then through APIs can get data from you. And then they are at liberty to perform those activities that they are regulated for. So they can probably give them a visibility of the account balance that you are basically maintaining, or maybe the lending products as well. Now, one way it could be looked at from the established incumbents is that, fine, we have that relationship already, now a third party is coming in, and now we are completely making it transparent of the customer data to them. Now, what is the upside for us? I think the only consolation there probably is that data or the API pull or the field that we're sharing can be monetized. So that's one consolation. But would that be enough to trade off the kind of cannibalization risk that this kind of sharing of data poses? The jury's still out for that, and the market will actually see how that turns out and how that story unfolds. We've seen the learning from other markets, but this market could possibly be different, but we'll see. But there's another side to it also. So I think we could be, as licensed finance institutions or banks, we could maybe be a little passive in our approach and say, okay, fine, this is a mandate, and we have to dish out this data to a third-party entrance, and there's no other way but to just monetize it. And then there's a debate, by the way, how much are you going to monetize it? So if you just price it too high, then there's another debate that's going to be sparked, and then those would be an issue, and we've seen those happening in some markets also. But again, so the way I look at it, and my discussions with the solution provider has been so far is, fine, as a bank, as an LFI, we have to have a console that will dish out this data through APIs to the other parties, and those parties need to have also the same kind of platform to interact with us with all the securities built in. Why can't we as a bank can also have that console with us, if you know what I mean? So I'm trying to turn the tables here. So fine, we are already established, we have visibility on our customers, so these guys are trying to give visibility to the customers for all multiple relationships that they have. Why can't we do the same as well? So my question now to the solution providers is, fine, I'll build this console to give data out, but I also want another console that if I want to ramp up my application, where if they have multiple relationships, my own customers, I can give them the visibility through my app as well. So it's a very interesting situation, and if you're creative about making this problem to go in your favor, there are some ways to do it, but what will actually happen, only time will tell. So the situation is very, very interesting. It's evolving very, very quickly. We have learning from other markets as well. We'll see how it turns out here.
So just to, Noman, just to take that forward, so what kind of, I want to say challenges, what kind of inputs are you taking from the regulator on open finance as you're building a strategy going forward?
Inputs from regulator. All right, so as he said, so it's coming as a mandate, that's one side of the story. But the other side of the story is, if we as the industry do not adapt, we will be in a losing race. Why I say that is because the generation which is coming just behind us, they are not interested in opening 5, 3, 2 different banking apps and do their banking. That generation is saying, show me my financials in one app. So and that generation is, by the way, not far behind. They are there now. So their span of attention, as we call Mr. or Miss Generation Alpha, and the generation of swap. These guys and girls, open finance, open banking is to protect us and to make sure that we are ready to give them that experience they are expecting from us. So it's not going to be a choice. Therefore, yes, as Kashif said, initially, we are working very closely with our regulators to establish the right regulations, security frameworks, policies, legal aspects of it. But also we are realizing that it's going to be no choice-based initiative because customers will demand very soon. That generation is coming. So we have to be ready for that.
And how are operations coping up with open finance requirements?
See, more than operations, I think what Kashif says is absolutely right. There is no way of getting away from here. The big banks are going to lose out at the beginning because we are obviously in the competition. The smaller fishes who are coming in, they are the people who will think. But who's the winner in the overall is the customer, because they are the people who will actually get a real flavor of it. And that is why all the regulators are pushing your OpenAI. And I think together with it, what will come in is the embedded finance, because that is what will actually help OpenAI to further, open up, because that's where, all the businesses would be looking forward to, because that's where I would like to sell more products at a time to the customer. But from an operations perspective, it hardly matters, because ultimately, if you have seen the way the direction is going, AI is making a dent into operations, right? So the more and more of what Kashif is saying is it is automated. More and more automation means less and less of operations work. So what does that mean ultimately in operations? Maybe supervising a lot of AI agents. Yeah. That's what we'll end up with. So ultimately, I don't see much of operations left after a few years, the way with AI is moving.
Now, just to, when we talk about lending, and we also we're talking about payments and we're talking about digital payments, but we still feel that is the region, or is, I won't say only is UAE, but even the region, specifically UAE, are we a real cashless society at the moment, or are there any barriers for us to actually become a true cashless society? I mean, I say true in the sense of 100%. We talked about in the morning the penetration of the mobile phones. We talked about how the digital payments are increasing. We talked about how the asset base is increasing. At the same time, how opening of accounts have been increasing with the new digital bank, reaching out to unbanked customers and so on and so forth. But are we a true cashless society at this moment? Maybe I'll start this with Barid from you.
See, in UAE, they had already predicted something. By 2027, we want to go cashless or something. But that is something which is impossible to work out in 100%. It will never be 100%. But yes, of course, it will reduce and continue to reduce, and maybe it will become near 100%. So, but cash will always stay. You just cannot take away the fiat currency from circulation, can you? But if you look at it, there is a cultural requirement as to why people still continue to use cash. The elderly people, they still believe in cash. They're not conversant or happy with swiping away on a mobile. So they still find it very difficult. And I think today, more and more, the security and the risk. People are all of a sudden realizing the risk of using too much of maybe mobile apps, your QR codes, your barcodes, etc. They're afraid because they don't know what's happening. Because entire technology which is happening behind and which is actually creating so much of a risk for us, I don't think everybody is realizing that. So that's another reason why cash will continue for some more time, because people are still quite happy to keep some cash in their pocket. I think everybody, I don't know, many of us out here, other than a few, all of us have cash in our pockets. I'm 100% sure. So it's not going to become a cashless society overnight. But yes, the direction is there. Like after COVID, I think it's really got, speeded up. And going forward in the next few years, definitely the cash, dependence on cash will slowly reduce. Like the new generation, they don't want cash. They understand that very well. Yeah, so they're willing to live with that risk because that's become part of their life.
So just to Anjan, back to you. Just to take what Barid was mentioning, right? Cash is going to remain. But there are markets where cash was king, and there were a lot of fintechs that came in and kind of revolutionized the market. So anything that you think on from a fintech perspective in this region, there are a lot of fintechs already here, there are a lot of innovations happening, but still, is there something that is still remaining to be done where fintechs can play a role?
See, when it comes to, and I agree with Barid, when it comes to being cashless, see, there are two parts to this. One is obviously making a transaction happen. And the second aspect of ensuring that, I stay safe in case of any uneventuality. So I think, as you rightly said, cash was there, and in countries like India, if I may say so. So cash was king. Moved to a cashless world. A lot of times fintechs came in. And I think specifically in UAE, there is still work to be done. and there is potential to be done. Because first we'll have to understand why we can't reach to a huge penetration of being cashless. So there are 2-3 reasons. One is obviously the first reason is the penetration. Let's say how many people are, as you rightly said, how many people have mobile apps, how many people are tech savvy. That will continue to grow at its pace. Fintechs will catch up there. The second part of that is, where fintechs can play a potential role is ensuring that when I'm making a transaction, the merchant gets it in real time, because that's confidence that poor guy needs when I'm making a payment, right? So he does not need to wait or check his mobile phone to when the transaction goes through. And usually that happens when there is a scenario of cross-network or cross-border payments, because that's where the uncertainty lacks in. So when, let's say, if I'm traveling from India to UAE, I'll carry a Forex card, but I'll also carry dollars. Because I know, what if this network does not work? What if the visa is not supported at that guy's network, right? What do I do? How do I pay to him? So I think that is where fintechs still have a role to play, ensuring this cross-border can be settled in real time. Now there are problems, obviously, because not every country is UAE. Every country is catching up at their own pace. So how do we ensure that rails are, smoothened up for the settlements to happen instantly? I think a lot of us must be familiar. Back in India, there was a fintech company, not name it, but they came out with a sound box. So at the moment you're making a payment, there is a voice coming out of the sound box telling that the payment is done. So that the guy does not have to log into his banking app to check whether the money has come or not. So I think that's where fintechs can still catch up to a role. And I think the last part would be, ensuring there is safety and security. I mean, people are not still very sure. Let's say if I have to transfer small amounts, I'll be okay. But let's say if I'm buying a house, I like to do it using a check or going to a branch to do that transaction. Just to ensure, because it's a high value transaction, people are still not very confident of the tech stack, saying, it may land up somewhere else. And the bank will say, I'll need 4 days, and the guy will say, okay, now price has gone up. So I think that's where the trust and the AI and the fintechs can ensure that, these things are being brought into the trust system. And that's still a game to play there.
Before I go to the audience, I would like to have one common question to everyone, right? So if you could redesign digital lending or payments from scratch with or without using AI, what is the one customer pain point you would like to solve? To make life simple, I can give you two benefits, which is you have enough money, that is you have the budgets, and the regulator is willing to listen to you. So in that context, what will be the answer? I'll start with you, Kashif.
So I think, this question, if you ask me, is pretty redundant already, because when I started underwriting, I already said we have technology today to underwrite the customer just by facial scan. So I go back to that. So when it comes to actually the technology, right now we have enough to give a wow experience to the customer already. But again, like I said, we have to respect the law and the regulation as well, and a lot of times. So let's say in the onboarding journey, just by facial scan through EFR, I can pull 52 data points. And I can pretty much in a stage to actually tap into all other sources. I can tap into More, I can tap into Bureau after getting the consents. I can tap into a few other government sources also and get the pristine data in. So I have access to data. I have the technology to go through very complex algorithms to arrive at establishing the income. I also have the rule engine to actually help me take a decision, no matter how many segments of the customers we have, and we can spit out a decision on the other side. I think from technology perspective, I have no complaints so far, because I think I'm enjoying what we're building right now. But again, if you were given a carte blanche right now, okay, fine, ask for more. So then probably today, my arm is being twisted to do the Emirates ID scan also alongside facial recognition, which practically is not required. It's not required at all, if you ask me, from all practical purposes. Because when I do the facial scan, I can go and fetch all data on Emirates ID as well, alongside a JPEG image of the Emirates ID as well. So that could probably fall onto one of my wish list items, that let me just scan the face, let me not ask for the Emirates ID scan, right? So, but it's more of a law rather than the regulation only. Because when I interacted with EFR, which was the MOI, They said, yeah, you can do that, but we will not allow you because that possibility is only for law enforcement agencies. So there's a very fine difference in what you can do technology-wise, or you will not be able to do because of the regulation is different, right? So that would be probably one of my wish list items. The other is, from regulatory perspective, we are supposed to take customer input when it comes to FATCA CRS or nationality, which we can also pull from the existing data, but there's one regulation that actually mandates us for the customer input, and then seal it with a legal disclaimer that he takes responsibility of this recency of this data, and also agrees that he will update if that something changes there. So if I were to improve upon the overall customer onboarding experience and underwriting, I would probably take these 2 points out if possible. And that would make actually just the facial scan, and bam, you have a card with an X limit, or you're applying for a loan, so you just scan your face and bam, you have an amount which is already approved for you. So yeah, but that's kind of a dream. That is possible if these 2 changes are in place.
Barid,
Yeah, I think just I'll add on to what he said a little bit. So can we do away with the uncertainty? Sorry, can we do away with the uncertainty? By that what I mean is, as he said, the customer facial recognition or whatever, he comes in and within a few minutes I'm able to tell him that yes, you have it. Either I give you a card with this limit or I give you a loan with this. So if I can do that, then that's a customer wow, because that's what people are looking for. So that uncertainty can we remove totally. That could be one. And the other one is, to quite an extent, we have done away with our documentation. So how can we do away with total documentation? We don't want anything. You just come in and say, I want it, I know who you are, I confirm you, and you get your loan or card or whatever.
True, that's very true. Because quite frankly, sorry, I'm adding to that what you're saying. So documentation is not really needed now, and that's big thanks to technology. So see, whenever you're trying to underwrite an individual loan or any lending product, I'm only talking from consumer because I know SME and corporate is a completely different world altogether. You pull data from, oh, sorry, sorry for that. So what happens is now, so the biggest question is to establish the income source, right? And that is where the whole discussion between the credit risk comes in. Today, the algorithm that we have fixed, so we don't rely on one source of income establishment. We rely on multiple and then apply logic to give weightage to one over the other and then arrive at a established income. And then if we're still not happy, we'll still go back and tap into more contract and match it with a variance of 10 to 20%. So that's how paranoid we are to make sure that the income is established correctly. And the source of income is coming in, so we have 24 fields of income coming from bureau already. So we take the last 3 because that's more relevant. We also go back and see in ACB, we have the source where we can actually go back and see if this customer was underwritten by another company recently, and we can, what was their established income for this customer, we can pick that up also already. Then you can pull FTS, so you actually have the credits in the account coming in. I mean, you have already too much to establish, and this is not coming from the customer. It's not self-submitted, it's not self-declared, it's coming from the golden source directly. And now you apply algorithms on it to give weightage as per your own credit risk appetite to find at what level, what weightage will you give to, let's say, FTS data or to the bureau data or to the contract from the more that you have pulled. And even after this rule engine spits out a number, you still go back and dip it back into Mohre to see whether his contract, which is in Mohre right now, matches and the variance is between 20%. So this I cannot, so if I take myself back to when I was getting certified on credit risk underwriting, this was impossible. And now, I mean, I'm like a kid in a candy shop with every problem is practically solved through technology. Here. So you're right. I mean, the need for documentation has actually been done away with technology already.
Noman, your take.
Just, first of all, I'm so inspired by Kashif's energy and passion. This is pre-lunch. If it's post-lunch, you can see what more will come from Kashif, right? Thoroughly impressed, man. Just one thing I will say, that now we have the capability to build journeys around customer emotions. This is what we need to work on. So when Chetan receives a very heavy bonus from his chairman in his account, he is going through some different emotions. He's carrying that money and he's saying, what do we do with this money? Help me. That's a different emotion than if Ram is looking for a nice car for his wife or for his children. He is going through a different emotions. Now, we have the technology and the capability today to knit journeys around those emotions. And I think that's the game, and if we have to rewrite everything again, we're going to actually stitch everything around emotions, not even around events.
Anjan?
So I think most of the parts are already covered. Just two things I'll say. I'm just wearing a consumer hat here. So if I am requesting some money from a bank, so people say, okay, millennials, Gen Z, they need fast, they need quick. Actually, Barid said very rightly, it's predictability what is needed. So if I'm asking you to give me money, at the time of application, can you be sure, based on all the information which you already have about me, whether I'll get this money A or not, right? So I don't have to wait for days for you to say yes or no. So I think predictability, if we can do it at the point of application, rather than some reconciliation happens and somebody says yes or no. So predictability, if I'm requesting certain amount of money, whether I'll get it or not, assuming all the data is already there, digitally available of me. And the second is all the hidden chargebacks the bank is going to underlay or put it on me, which actually comes as a surprise and actually breaks customer experience later. Saying, hey, okay, I'm giving you 25,000, but hey, this is the rate. It was promotionized, but you're not eligible for this rate, right? It was there on my commercial, but this applies only to this category, not to you. Because hey, I applied for that rate. If you're not giving me that rate, why didn't you tell me at the application point, right? So I think with all the good technology and anything else, if these two things are certain, because it's like, you're shopping on Amazon, you see a different price and you go to checkout and you see, 40 dirhams added. You'll abandon it, probably go to Flipkart or somewhere else, right? That's not a good experience. So these two things, I think if banks can really work on, because that's still, I think some banks are doing, some are still catching up, some fine print supply, and when we're actually getting money, you are getting lower. So when I get the money, what money will I get? And is there any charge? Can you tell me upfront? And that has to be done on the digital application page. On the very first screen when I'm putting my Emirates ID or facial scan or whatever, just tell me there. I think very good experience for any of the customers or any of the banks to go through, because that's something that I expect from my bank to come. And I think AI can, or any other technology should complement it.
That's great. A lot of questions will be there from the fintech members in the audience, but obviously there are a lot of people working on documentation, and you had a very interesting perspective of documentation, because anyone is asked to, the first thing everyone who's walking to a bank will say, minimize the documentation, right? So on that count, I would like to open the floor to the audience. Anyone has any questions, please? Yes.
Hello everyone, my name is Ajay and I'm representing testing experts here. So first of all, I will like to disagree with Mr. Barid and Anjan for saying that cashless is still too late. I believe it is there. Many of us are going cashless. We are using mobile phones to make payments, and I did see in between Noman smiling at when it happens, because I know the background in terms of the human psychology, how it is moving and shifting. And I always enjoy listening to Noman on that front, how beautifully he mixed the human psychology to IT and how he manages business as well. So the question effectively is about, are the banks prepared for the Gen Beta? Now this is where you see, we are Gen X, Y, and Z, and we all are parenting the Gen Beta and so. So these guys, these kids are at the age of 7 or 5 are using Roblox. They're into their virtual world. So how banks are prepared for it? Because they would be more relying on algorithms than institutions. So what is your say on that? Noman, maybe if you can.
Your question is how banks are prepared for it now? I think and there are a lot of bankers here in the room also, so I will say on behalf of everybody, we are working on it. Let's put it this way. We are working on it. See, I think somebody mentioned before as well about contact center interactions in UAE today. Across all banks put together, we receive close to 700,000 calls, more than that, in our contact centers every day. None of these calls are coming from that generation you are referring to. It's coming from generation of a different type, right? We know that this generation you are referring to, so-called generation alpha or anybody after that, they're not going to call contact centers. They're not going to call or walk into a branch. I don't even remember when was the last I walked into a branch, by the way. I don't even remember when was the last I walked into an ATM machine, by the way. So we are getting there. Banks are getting ready. That's why the focus of the banking industry is right now to exploit the data as much as possible. We are generating millions and millions of events, data events across our customer network in the financial industry on daily basis. At the moment, we are struggling to consume that data in a correct manner. But we are very clear, the line of sight is very clear that if we don't change now the way we use data, tomorrow these boys and girls who are in universities and colleges right now, they will be with Revolut, they will be with some other apps and companies, not with us. So we are not there yet, but we know this risk coming our way and we are preparing for that. And if that's how I answer that right now.
Any other questions?
I thought everyone will be hungry, so still questions are coming.
So question is for Barid. Barid, you've been seeing lending for a long time in the industry in UAE. Earlier in the day I presented that there's a huge growth in digital lending in UAE. Almost what UAE is lending is twice or thrice of more matured markets in terms of GDP to lending ratios. Are you seeing bank getting prepared for AI-driven lending to ensure, one, a huge amount of lift to credit and the quality of the credit? And second, are bank prepared for embedded finance-driven lending, which is where the future is? And again, it can be your personal view or the industry view.
If I can add to that question, and how do you ensure that AI is free of all bias?
Yeah, I think that's not necessarily a tough question, but it's a difficult question to answer. Yeah, so let me begin with what you said. Like, say, for example, yes, this particular country has the need for personal finance has increased multiple fold out here for individual customers also. And that is going up and up. With the more influx of more and more people coming into this particular country, initial setting up, they want their cards, and I think this is the only country where people carry so many cards in their purses. It's not not that one or two cards, but they have multiple cards, most of them. So the requirement of the people who continued the influx, which is keep coming in, I'm sure that from the business perspective, they'll understand how many people are coming in. So that's what keeps the big banks running. And yes, we are seeing a huge amount of uptake. Now coming into the AI part of it. So is AI doing anything about it? Yes, absolutely. A lot is happening. Like, see, initially AI was doing only your data analysis part of it. Like, it was coming up with the analysis, it was giving you your reports, it was giving you the data based on which you could take your decisions, and the decisions could be quicker and faster. Now it is taking a new shape, so where we are looking at the content also and allowing them to actually take a decision. So this Gen AI will actually take decisions like a human being or an underwriter used to take before. We don't need them anymore. So yes, all banks are experimenting, all banks are coming up with it. They have bits and pieces already implemented, and they're definitely looking at the bigger journey. So if you look at a card processing or a loan processing, what used to take maybe sometimes 2 days, sometimes 3 days, depending on the data, depending on the customer, that has come down to hours already. Okay, and in certain cases, it's real time. Like, say, for example, you have pre-approved loans for customers, pre-approved cards for customers, where people don't even have to apply. We go back and tell him, hey, why don't you take a card? Here is a card. Or sometimes you even send it to him, saying that, okay, this is your card, please take it. Okay, and then try and make him activate it. So from that perspective, yes, this market is such that where there is a demand for loan, there is a demand for cards, there is a demand for, so that's definitely yes. And sorry, for you, if you can just repeat your question one more time.
So the question was on the lending only. How do you ensure that if AI is being used, how will you ensure, and this question even, Kashif, you can answer as well, it is free from any bias?
Absolutely. So the answer to that is, initially when I said that the data is the most important part of it. Yeah. And for legacy banks, as Kashif rightly said, we have the challenge because not necessarily we have the right data. Again, like the examples that he took, that we can get data from all the government channels today, but even those not necessarily are 100% accurate. But the responsibility of using that data and getting the results out and giving a customer that is up to the banks. So how much of that risk is the bank willing to take today? That is the question mark. So if we are willing to take a risk, saying that, okay, fine, if I lose some money in the market, I'm fine with it, I'll go ahead with it and take this call. But that risk factor is very, very important because of that, the banks still prefer to do a little bit of eyeballing before actually saying yes or no. So maybe I don't have so many underwriters anymore. The number of underwriters have reduced. Complexity of the loans, based on that, maybe the underwriter still comes into play. So this is where I will say responsible and ethical sort of AI, that's what comes into play out here, so because you got to be responsible. At the same time, you got to be ethical. I cannot use it. So that's where it comes. So till date, till such time, the data becomes very, very clean to us and the banks are willing to take that level of risk, I think it's a little far away to make it purely automated and end-to-end.
So if I were to just, I think, address the gentleman's point, sorry, about the bias, right? So I understand what you're precisely referring to. So if I were to just break down how you deploy AI, so you have the LLM at the base, then you have proprietary data set on top of it, and then if needed, you have public data set even above, and then you have your wrapper application, which is use case specific, right? And especially like Barid mentioned, that when you're trying to underwrite a customer, you're really not tapping into the public data set. So you're not going to the internet to fetch details. So you're actually going to fetch details from the proprietary data set that you captured maybe from the customers or from the government sources directly, right? So when you have that cleaner data set, the probability of bias is eliminated by default, if that makes sense to you. But in cases, if you can imagine a use case where you actually are relying on publicly available information, then you cannot eliminate the bias. So I hope I've answered your question.
I think if I can use an example here, the bias is being used in US by the ICE. I think they're using AI to tap down on these particular people. So that's definitely a bias, but not necessarily on lending.
I know we are running out of time, but we can have one last question before we close the panel, if any. There's one there.
So while we spoke about AI not having bias, it's also non-judgmental. In a sense that if you want to replicate your underwriting and do that with just the modeling, then sky is the limit in terms of the volumes that you can do. Is that a right statement to make?
That's true, yeah.
I think that gentleman was raising his hand from the first. If you could just, before we close it.
Thank you. AI is reshaping the lending and the payments. How can bank ensure that those decisions are fair and transparent and trusted by customer?
That's one of the challenge, if you recall the very first question about the operational challenges around deployment of AI at scale. This is one of the challenge, plus the bias topic which he brought, because right now the explainability of a model and the decision which is coming out of the model is that one spot we are all focused on, because whether it's lending, whether it's credit, whether it's deposit, any interaction which we are doing and we are about to take a decision, whether that decision is fair or right or ethically right or biased, the traceability and lineage to be created between the decision and how the model arrived at that, that's the challenge we are trying to solve for right now. We are not there yet, but the good news is now the technologies are coming where we can deploy governance on top of model to get to the right answer and then go back and take a decision on behalf of customer. So it's a challenge right now, but getting solved for as well.
Right. I think we had a very engaging and interesting panel. I think with this, we draw curtains on this panel. And thank you, gentlemen, for being part of it. And thanking the audience for being engaged.